what's interesting about sort of the conversation and flip-flopping with President Trump is that on the one hand, he really wants to defend anything that comes up, but he also really doesn't want to go to war. How would players in the Middle East look at this push and pull within the president himself?
Well, I think you have the term deep dive. I think it's a deep, confusing dive. I think it's very confusing. What is the message? But I think the fear is that this could really pretty quickly escalate, plenty of room for accident, misunderstanding, future incidents. And I think the Iranians are in a corner. They're exporting very little oil, and so they're reaching out, and you see it not just in the waters of the Gulf, but on the Arabian Peninsula as well.
Well, exactly, Dan, and not so much a war by intention, but by accident with all those troops. So we talked to Ash Carter, the former Secretary of Defense, about that just this morning. This is what he had to say on that subject.
Our forces are really up against one another. We have tens of thousands of forces there in the Gulf, and it only takes a few minutes for something to develop very quickly.
So, Dan, it only takes a few minutes.
And David, let me add to that. Not only in the South China Sea, for instance, it's U.S. and China. Here, it's forces up against each other, and there are a lot of other players who have their own interests in the region. So, their possibility for collision or accident is even greater.
Well, exactly. It's a terrific point because we tend to focus on Iran and the United States, but you've got Saudi Arabia, you've got the Gulf states, you've got Israel for that matter. You've got a lot of players in the neighborhood.
You've got the Houthis in Yemen who are firing missiles into Saudi Arabia, who are allied with Iran.
So when it comes to the oil markets, how can the oil markets possibly price in that range of uncertainty?
Well, you know, until a week or so ago, the oil market was just shrugging everything off, and you had the gloom settle upon the oil market. Then you had these incidents combined with the fact that the President Trump and President Xi are going to meet at the G20, and maybe there's going to be a trade deal. And those two things have really turned the oil market from that heavy weight of gloom to the kind of strength we've seen, the relative strength we've seen in the last few days.
And I love that you highlighted that because it's a supply versus demand. G20 deals with demand, and then the OPEC meeting deals with supply. I want to hit on supply quickly before we go to demand. In particular, we have a chart from RBC Halima's Crop that talks about the amount of Houthi attacks on Saudi Arabian assets, and the Houthis, as you mentioned, through Yemen, backed by Iran. How is Saudi Arabia thinking about the Iran risk into this OPEC meeting?
Well, I think they have to manage Iran because, remember, Iran is also a member of OPEC. They have to choose a new Secretary General or reappoint Secretary General Barkindo. So they have a lot on that agenda at that meeting. So, but meanwhile, I think the Saudis are feeling the pressure of being hit. Their pipelines hit, airports hit, and a sense of vulnerability in this situation. And I think probably they don't want to see an escalation in the region because everything is pretty close together in terms of oil infrastructure.
So, Dan, that's on the supply side. Let's turn to demand.
I love, by the way, you're differentiating. One meeting is demand, the G20, and then the supply is OPEC. It's a very good way to see the balance.
Well, and so let's go to G20 and end of next week and what happens. Let's suppose, because I've heard this is sort of the best case scenario, they come out and say, we will not impose more tariffs on China for the time being, and we'll resume active negotiation. I've heard that as being the upside case. How would the markets react to that?
I think that that's not the kind of message that the market will really want. It would want something more affirming that actually you can see an end to the trade war. So I think that maybe that's kind of already into the situation. I think they'd like to see a sense of a resolution coming here.
Does that make Saudi Arabia's job? They have to continue to wind up making sure that OPEC Plus cuts production and extending that 1.2 million barrel day cut when you have the supply uncertainty, but then the demand uncertainty. It looks unlikely to get 100% resolved at the G20.
Well, I think if that's the case, then they'll go right. It's basically you're going right from the G20 to OPEC. And when I was, recently, you could see the dialogue between the Russians and the Saudis going on right now. And really, the Saudis are basically taking the cuts. Mm-hmm. And going to supply and demand, this year we see U.S. supply growing by 1.4, 1.5 million barrels a day, and demand by only 1.1, 1.2 million barrels a day. So really, for the Saudis, for the Russians, for all these other countries, it's accommodating the continuing growth of the United States is the great challenge they face.
And how more they're going to want to do that. So just ending on the oil price, do you feel like where we're sitting is accurately reflecting both the supply and demand risks in the market?
Yeah, I think so. It reflects also the uncertainty in the market. I mean, you just came very close to something that really hasn't happened before, an actual direct hit between the United States and Iran. So I think really the market is poised between where it was before, which is just gloom, and now the uncertainty and the possibility that maybe demand will be spiked up because there will be some kind of settlement on China. I think if there isn't, there'll be real disappointment, and that will certainly show up in the oil price.